Good morning. Welcome to CATEX TV. My name is Frank Fortunato. This is a live broadcast coming from Princeton, New Jersey. Today is Wednesday, September 24th, 2008. It's 11:30 a.m. Eastern Daylight Time in the U.S. It's 4:30 p.m. in London, 12:30 p.m. in Bermuda, and 9:30 a.m. in Mexico City. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX TV. On this day in history, in 1869, this is a case of the more things change, the more they remain the same. In 1869, the financiers Jay Gould and John Fisk attempted to corner the gold market on Wall Street, leading to a financial panic that ended up with thousands of investors in financial ruin. We have one breaking story. This just came in from Bloomberg. Sales of previously owned U.S. homes fell more than forecast during the month of August, and prices dropped the most on record. This is, of course, a sign that the market remains in a deep slump. Sales of existing U.S. homes dropped 2.2% to an annual rate of 4.9 million units. This is down from 5.02 million the previous month. So the median price has now dropped 9.5% from August of last year. Warren Buffett is going to invest $5 billion in Goldman Sachs. He said that, quote, Goldman Sachs is an exceptional institution. He went on to say it has an unrivaled global franchise, a proven and deep management team, and the intellectual and financial capital to continue its track record of outperformance. In Tokyo, the Kyoto News Agency reported that Sumitomo Mitsui Financial Group, the third largest bank in Japan, also plans to invest several billion dollars in Goldman, with which it's had a long relationship. However, the Japanese bank said that it had no plans at this time to do so. Last weekend, Goldman, of course, accepted regulation by the Federal Reserve as a bank holding company, giving it easier access to financing. Late yesterday, American International Group said that it had signed a definitive agreement for up to $85 billion in borrowings from the U.S. Federal Reserve, which is the main part, of course, of a rescue by the central bank that will see the government take a 79.9% stake in the company. AIG's new CEO, Edward Liddy, said in a statement that the facility was, quote, the company's best alternative, end quote, in the current market environment. Under the terms of the agreement, AIG has to pay back the loan from, among other things, asset sales and new debt or share issues. In the statement released last night, AIG made it clear how onerous it views the terms of the two-year loan. Not only will it pay 8.5 percentage points over 3-month LIBOR rates, which would put the current rate at well over 11%, but it will also pay commitment fees. There will be an initial gross commitment of 2% of the total loan facility, and subsequently a fee on undrawn amounts of 8.5% a year. The interest and the fees will be added to the balance outstanding, according to AIG. It wasn't immediately clear whether the signing of the agreement will derail efforts by a large AIG investor group that is working to thwart the government takeover. A lawyer for those investors, which represent more than a third of all AIG stockholders and have the backing of former CEO Maurice Greenberg, said representatives of the group were to be briefed by the company on its financial position later last night. The New York Insurance Superintendent Eric Dinello, of course, is the chairman of the new NAIC task force dealing with AIG. He said that he expects AIG to begin selling state-domiciled units within weeks to satisfy its $85 billion bailout loan. The sales, Dinello said, could involve 71 companies domiciled in 19 states, roughly 1/3 of the total number of AIG companies. The role of Dinello's task force will be primarily to provide constant communications between the various state, federal, and international regulators. It will also work to ensure that policyholders are protected and that there are no allegations of unfair practices by potential buyers. Dinello said, quote, this is an unusual situation where you want to compare them all simultaneously. The states, he said, may agree to use a common template for AIG sales, a step that could be accomplished without any regulatory change, he said, because AIG will sell its assets holistically